If you want to understand what is going on in the equity market, where we have all-time highs in the midst of a global pandemic, which is irrational. I don't care how, all these pundits sit around and try to come up with explanations for why what is occurring in the equity market is entirely acceptable. And Market Structure Edge is all about finding ways to make money in a market that behaves irrationally. In the last 20 days, active money has averaged less than 10% of trading volume, 9.3% in the S&P 500. First time in history that active investment behavior, rational thought, has been less than 10% of the trading volume. What that means is that over 90% of the time, the market is a reflection not of something rational, but of something short-term, asset allocation based or trading based. And if we don't factor that into our thinking, both public companies and investors, we're going to get caught out. There's an explanation for why the market is way up. And it's three simple words: exchange traded funds. And everybody wants to say this, but there's a mathematical reason for it. We're all about math. And so through November 2020, there have been $5.2 trillion of ETF creations and redemptions. It's important to note both of them. There are also $5.2 trillion in US ETFs. So that means that the entire asset base in ETFs has been created and redeemed with a month to go for statistics. And here's the kicker. There are $470 billion of ETFs created and redeemed every month, and over 400 billion more creations than redemptions. It's the same thing as creating currency. If you continue to create more currency that depends on an underlying asset class for prices, what will happen to the asset class? It will increase in value.